Hey everybody, it's Eric. Welcome back to the channel. In this video, we're going to walk through the recently updated SPX Daily Forecast Indicator from alphacrunching.com, which is a pre-market indicator I've developed geared towards 0 DTE traders. We're going to talk through how it's constructed and how you can use it before the market opens to help guide your SPX 0 DTE trades for the day. And we're even going to compare the forecast to an actual trading day so you can get an idea of how you can use this in your trading. Now let's get started. So first, to get to the daily forecast, we're going to be selecting SPX and daily under forecast at the top under the dashboard. We can then select each day of the week. If you do not select a day, you're going to see the forecast for each day of the week before the trading week begins. So you get an idea of which days tend to be bullish, which days tend to be bearish, or which days don't really have a trend. But once you select a specific day of the week, we're going to be able to look at some of the newer metrics that are going to help guide that day. So the week of June 9th, this is Wednesday, this is going to be June 11th. Before the market opens, we can take a look at this to get an idea of how has SPX typically traded over the last month. And what we do here is we break down SPX into 5-minute intervals, and we find the average movement for each interval over the last month or so. And this is day-specific stuff. We then accumulate those positive and negative deltas to get an idea of what tends to be the general trend of the day. In this example for June 11th, the first number we're going to notice is a percentage of time above zero. That is very low. This is 1%. That means only 1% of the entire day has typically been above zero. So this is a somewhat of a bearish look. Obviously, we're into the negative SPX points here, and there tends to be sort of end of day fade. So now I'm going into the day with, okay, the market looks a little bit bearish, but is this better or worse than last week? So this is where the new metrics come in. We can select the week before. This is what the forecast looked like the week before. You can see it's actually pretty similar. It's relatively kind of choppy in the morning with an end of day sort of fade. We can look at 2 weeks before. We can see how the forecast has sort of shifted over time, where it used to be a little bit more bullish with the end of day fade, and it's sort of been increasingly bearish. The metrics below are going to help compare the current forecast that you've selected with the previous week's forecast. So in this example, even though the forecasts are relatively similar in look, all of our metrics here are basically negative, telling you that this week's forecast is a little bit more bearish than last week's forecast. So now we can go into the day with a little bit of a bearish bias, and we can look for things like key resistance levels, maybe focus on call credit spreads, because over the last month, Wednesdays have tend to be a little bit on the bearish side. So let's take a look at the actual chart for that particular day. Again, this is Wednesday, June 11th. We had kind of a bearish bias. If we take a look at the 5-minute chart for SPX that particular day, this is what actually happened. So even though the market opened here, it was a little bit bullish in the morning, but ultimately ended up fading towards the end of the day. So we're not looking for the forecast to be exactly right every 5-minute increment. We're looking for a general trend or general pattern for the day. And for this particular day, that trend was basically down. So we're looking for key resistance levels. I'm using a line chart just to kind of compare the lines. Now the forecast does have an averaging mechanism. So a lot of times you will get more price movement within the actual day. But again, this is the average movement of the day. And for this day, it happened to be bearish, and we ended up with a relatively bearish day, although it was a little bit more volatile. So you still have to trade and factor in current market conditions, but hopefully this tool will give you a little bit of an edge, a little bit of something to look at before the day opens to help you in your trading.